Around the world, central banks are quietly changing the rules of money. What used to be backed by gold is now just numbers on screens. But that could soon change. In this video, we explore how a return to real, asset-backed money could happen, what price gold would need to reach for that system to work, and what global forces are preparing the stage for it. Reinstating a global gold standard means linking major world currencies, or even one unified reserve currency, to a fixed quantity of physical gold. In plain language, every note or digital unit in circulation must be backed by real gold stored somewhere safe. Such a system would require massive international coordination and enough gold reserves to support the global money supply at a stable price. That is not an easy task. It would demand trust, transparency, and the will of multiple nations to agree on one definition of value. Historically, the last global gold standard existed under the Bretton Woods Agreement from 1944 to 1971. Back then, the United States dollar was pegged to gold at $35 per ounce, with around 25 to 40% coverage of all foreign-held dollars. That partial backing system maintained confidence in international trade until 1971, when the United States closed the gold window. That single decision ended convertibility and created the era of fiat money, meaning currency backed only by government decree, not physical assets. If we were to calculate what gold should cost today for a full 100% backing of the world's total broad money supply, the numbers become staggering. Global central banks currently hold about 36,000 metric tons of gold. 1 metric ton equals 32,150 troy ounces, which means roughly 1.157 billion ounces of official monetary gold exist worldwide. The combined M2 money supply, including cash, deposits, and short-term assets, across major economies like the United States, the Eurozone, China, and Japan, sits near 95.9 trillion US dollars. If you divide that total amount of money by the number of ounces, you get a theoretical gold price of roughly $82,859 per ounce. That number shows just how far the world has drifted from hard asset-backed value. Of course, this is only a theoretical model. In the real world, politics, mining output, and new digital infrastructure would influence the result. A partial backing system, for example 40%, would bring the target range down to about $10,000 to $20,000 per ounce. Many analysts see that as far more realistic for a gradual transition phase. Right now, gold trades around $3,995 per ounce, with futures near $4,000. Forecasts for the year 2026 expect prices between $4,000 and $5,000 per ounce. These predictions are supported by strong central bank buying and ongoing de-dollarization trends. But without hyperinflation or a total financial reset, the $80,000 level remains purely mathematical, not a near-term reality. Many ask, when could such a system return? Some predict symbolic dates, such as the 4th of July 2026, America's Independence Day. But most experts agree it's unlikely before that. The world still operates within fiat frameworks, and returning to gold would require G20-level consensus. At the most recent economic summits, discussions of gold-linked payments advanced, but they remain limited to trade settlements, not full currency repegging. Behind the scenes, new alliances are shaping this path forward. Their motivation is simple: to reduce dependence on the United States dollar and avoid the weight of Western sanctions. During 2025, several nations began implementing what analysts call a gold settlement architecture. It allows commercial banks to settle international trade directly, bypassing the Society for Worldwide Interbank Financial Telecommunication Network, better known as SWIFT, and avoiding dollar conversion. They have also launched a precious metals exchange and started planning a shared basket currency backed by gold, crude oil, and rare earth elements. Together, these nations control roughly 72% of the world's rare earth resources, a massive strategic advantage. Russia and China are the strongest advocates for gold-backed trade. Gold already makes up around 18% of their officially reported reserves. Both nations are exploring digital asset networks, similar to the XRP ledger, to make cross-border settlements faster and more efficient. In this model, digital tokens could represent physical gold, bridging the gap between traditional value and blockchain-based payments. It's a blend of old-world trust and new-world technology. Western countries, on the other hand, show little interest in returning to gold. Since abandoning it in 1971, they have relied on monetary expansion to sustain growth. The International Monetary Fund, or IMF, may attempt reforms to protect the current fiat system, but change is already spreading elsewhere. Some analysts link these changes to the idea of a global reset, though what's really happening is a structural shift in how value is stored and transferred. Policy, not speculation, is driving this transformation. In many ways, these efforts have become a Trojan horse for a new financial era, quietly reshaping settlement systems from within. Supporters claim that vast off-ledger gold reserves, sometimes called elder assets, could one day stabilize the framework and bring a true value-based economy. The spark for global change, however, might come from what economists call a black swan event, an unpredictable shock that alters everything overnight. It could be a banking collapse, a geopolitical crisis, or a major cyber disruption. Some researchers describe Project Odin as a contingency plan designed to restore communications and reboot financial systems during such a crisis, though it remains speculative and unconfirmed. What is certain is that governments and central banks are preparing for instability. Security forces, including National Guard units in some regions, remain on standby under emergency protocols. From now through the year 2026, the world economy could enter one of its most transformative periods, where gold once again becomes the anchor for trust, trade, and true value. If this transformation truly begins, it could redefine global trade and the value of every currency on Earth. What do you think? Is the world ready to trust gold again? Share your thoughts below, and don't forget to like and subscribe if you found this breakdown helpful.